And the big question that sort of jumps out from all this, for me anyway, is, well, AFCFTA had this huge promise,
It's
right?
huge. Transformative, even.
But why are African businesses years later still finding it so hard to actually export goods across the continent? There seems to be a real disconnect.
That's the core question, isn't it? When it launched, Jan 2021, the vision was massive. A single market, 1.3 billion people, 55 countries.
Yeah.
The goals were huge. Slashing tariffs, boosting trade within Africa, lifting, the World Bank said, potentially 30 million people out of poverty.
30 million. And didn't they also project something like $560 billion in extra exports?
Exactly. $560 billion. I mean, those numbers paint a picture of a real economic shift.
They really do, a turning point.
Yeah.
But like you said, here we are, 4 years on?
Mm-hmm.
And the reality on the ground, it feels, well, less revolutionary than hope.
Welcome to your weekly analysis of key global trends and insights on macroeconomics, geopolitical shifts, currency movements, finance, trade, and top investment highlights.
With John
And Wendy.
You've tuned in to a fresh deep dive, and this week, well, you sent us some fascinating sources focusing on African trade and some related global economic stuff, too.
That's right.
So our mission today is pretty clear. We're trying to understand the current state of the African Continental Free Trade Agreement,
Mm-hmm.
the AFCFTA, mainly using this weekly statewide report, 6.pdf you shared,
Mm-hmm.
and then we'll try to connect that to the bigger economic picture for the other materials.
Exactly. And that Statewide report, it's quite comprehensive, actually. It covers AFCFTA's progress or maybe lack of it.
Right.
Also, market movers, global and African FX rates, even active stocks. So, yeah, plenty to dig into.
Definitely. And the big question that sort of jumps out from all this, for me anyway, is, well, AFCFTA had this huge promise, right?
It's huge. Transformative, even.
But why are African businesses years later still finding it so hard to actually export goods across the continent? There seems to be a real disconnect.
That's the core question, isn't it? When it launched, Jan 2021, the vision was massive. A single market, 1.3 billion people, 55 countries.
Yeah.
The goals were huge. Slashing tariffs, boosting trade within Africa, lifting, the World Bank said, potentially 30 million people out of poverty.
30 million. And didn't they also project something like $560 billion in extra exports?
Exactly. $560 billion. I mean, those numbers paint a picture of a real economic shift.
They really do, a turning point.
Yeah.
But like you said, here we are, 4 years on?
Mm-hmm.
And the reality on the ground, it feels, well, less revolutionary than hope.
That's putting it mildly, perhaps.
Yeah.
The report really emphasizes that businesses are, still grappling with the basics of cross-border shipping.
Still, after 4 years.
Yeah. That big jump in intra-African trade, it hasn't really materialized yet. Still hovering around like 13%.
13, that sounds low. How does that compare globally?
Well, the Modi Ibrahim Foundation figures put Asia at 59% intra-regional trade. Europe's at 68%.
Wow. Okay, so 13% versus nearly 60 or 70% elsewhere.
Yes. It really shows the gap, doesn't it? The potential is there, but the reality is lagging. Businesses are still, frankly, overwhelmed by paperwork.
And the costs.
Oh, logistics costs are still incredibly high. UNECA flagged this in 2023. Costs can be up to 40% of the goods value.
40%, just for logistics.
Just for logistics. That's roughly double the global average.
Double. Okay, so the vision is there, but the practicalities are tough.
Precisely. Though we should mention there was that early positive example, right? The Guided Trade Initiative in 2022.
Ah, yes, the tea shipment, Kenya to Ghana.
That's the one. It showed the framework could work. A little proof of concept.
A glimmer of hope then, but clearly not scaled up yet.
Not nearly enough. The bottlenecks seem to be winning for now.
Okay, let's talk about those bottlenecks.
Yeah.
The report points to, first off, red tape. Sounds like more than just a nuisance.
Oh, absolutely. It's a major impediment. Even if tariffs come down, these non-tariff barriers are the real killers.
Like what, specifically?
Endless customs forms, different rules at every border, causing delays. It's just a mess sometimes.
You see that reflected in things like the ease of doing business rankings.
You do. The 2023 World Bank Index, I think only 9 African nations were in the top 100.
Yeah.
That tells a story.
And those port delays you mentioned earlier, Durban, Lagos, days turning into weeks.
Yeah, exactly. That's a direct hit to businesses, especially smaller ones or those with perishable goods. Imagine trying to run a predictable supply chain.
That sounds impossible.
And there was an Afreximbank survey, 2024, talking to SMEs. 60% cited border bureaucracy as their top hurdle.
60%.
Yeah. Things like needing permits and triplicate random inspections popping up. It's the unpredictability that really hurts smaller players.
So much friction.
Yeah.
What about harmonizing the rules, like rules of origin? Is that moving forward?
That's another sticking point. It's complex determining where a product really comes from to qualify for AFCFTA benefits.
Right.
As of early 2024, I think the report said only 41 out of 54 members had actually submitted their schedules of concessions. That slows everything down.
So businesses can't even be sure if their goods qualify yet in many cases.
It creates uncertainty. And, the report suggests this isn't necessarily deliberate sabotage.
More like inertia.
Exactly. Inertia within fragmented systems. Getting
Right.
54 countries' regulations aligned is just a massive undertaking.
Yeah, I can imagine. Okay, obstacle number 2 highlighted, infrastructure. This seems pretty fundamental.
Absolutely fundamental. You can't trade if you can't move goods efficiently. The report paints a pretty grim picture of poor roads, railways, ports.
And most trade moves by road.
About 60%, yeah. But the kicker is, according to IIAG data, the paved road network hasn't really grown since 2012.
Since 2012. That's over a decade of stagnation on critical infrastructure.
Pretty much. So even if you remove tariffs, if it costs a fortune and takes forever to physically move the goods, what's the point?
And the report had that stark cost comparison, didn't it? Shipping Nairobi to Accra versus, say, China to the U.S.
Yeah, the GIS reports analysis. Nairobi to Accra, maybe $3,000, takes 20 days. Shanghai to LA, much further, often cheaper and faster.
That just puts African businesses at a huge disadvantage in the start, doesn't it?
Massive disadvantage. And then you layer on unreliable power.
Ah, right, production challenges.
Exactly. Hundreds of millions without reliable electricity. How do you run factories consistently? How do you scale up for export?
It connects back to that huge infrastructure investment gap the African Development Bank talks about.
Around $100 billion a year needed. It's a combination of things: funding, attracting private investment, project execution. It's tough.
So it's the physical movement, the cost, the reliability. All major hurdles. Now, the report also looked inward at the private sector itself. Are African businesses actually ready?
That's a really critical piece. The report suggests many businesses, especially MSMEs, micro, small, medium enterprises.
Which drive most jobs, right?
Exactly, like 80% of jobs. Many are, how did the Freiheit report put it? Non-innovative, often just in survival mode.
Focused locally, not thinking regionally or globally yet.
Sort of, lacking maybe the capacity, the finance, the information to scale up and compete in a bigger market.
And finance is a big one.
Yeah.
You see things like Afreximbank setting up huge trade funds.
Billions available, yeah, like that $40 billion fund.
But SMEs still struggle to get loans. The report mentioned higher rejection rates.
Much higher, yeah.
Yeah.
About 50% higher than global peers, apparently. So the money might be there at a high level, but it's not always trickling down effectively.
That makes expansion incredibly difficult.
Very. Plus, there's an awareness issue. That Brookings study in Nigeria back in 2021 found, 60% of firms didn't even know about AFCFTA?
60% unaware. Wow. How can they take advantage if they don't know it exists?
Precisely. And then there's the structure of exports, still heavily dominated by raw materials.
Not enough value addition.
Not enough. Limited tech adoption, limited manufacturing capacity to turn those raw commodities into higher value finished goods for regional trade.
So it's a whole ecosystem issue: finance, awareness, capacity, innovation.
Okay, what about the governments and politics? The report touched on that too.
It did, and it's nuanced. You get strong public support from leaders, endorsing AFCFTA.
Lots of speeches, handshakes.
Right. But then the actual execution, the implementation on the ground, it lags. Several factors. One is the complexity of overlapping regional groups, RECs, they call them, ECOWAS, SADC, etc.
Ah, right. Different rules in different blocks.
Exactly. Freiheit's report noted about 15% of nations are in multiple RECs, sometimes with conflicting rules. Imagine navigating that.
A bureaucratic nightmare on top of the existing red tape.
Pretty much. And then you still see lingering protectionism.
Like the Kenya example, raising tariffs.
Yeah, that 35% tariff hike in 2023 seemed to fly in the face of the AFCFTA spirit of reducing barriers.
So national interests sometimes win out over regional goals.
It appears so. Plus, the African Union, while championing AFCFTA, has limited power to enforce compliance among member states.
Like the stalled common passport idea. That's a good example. And of course, political instability doesn't help. The report mentioned Al Jazeera covering coups, like in Burkina Faso. That disrupts everything.
Trade routes, investment confidence.
All of it. So underlying it all, the report hints at maybe a lack of deep trust, maybe short-term thinking, sometimes hindering that collective push needed.
It's a tangled web. Bold vision meeting messy reality. Okay, let's connect this to the wider market picture in the Stay Wired report. How do the global trends and African market movers fit in?
Well, globally, you see things like the U.S.-China trade friction, tariffs on bikes, Apple shifting strategy, China retaliating.
Right, a lot of new barriers going up elsewhere.
Exactly. It's a stark contrast to AfCFTA's goal of reducing barriers within Africa. Different global currents.
Interesting contrast. What about the specific African market news? Kenya's growth forecast, Ethiopia, South Africa.
Yeah, those are relevant. Kenya's central bank optimism, for instance, might partly rely on AfCFTA eventually delivering, but the current hurdles could dampen that. Political shifts in Ethiopia or the economic and political situation in South Africa, power issues, election uncertainty, those definitely impact their engagement with regional trade.
And things like the Dangote petrochemical listing in Nigeria or petrol price cuts, do they play a role?
Potentially, yes. Lower fuel prices in Nigeria could ease transport costs slightly, which we know is a big issue.
Right.
And a huge player like Dangote listing might signal more industrial capacity that could target regional markets if, the other barriers are lowered.
And infrastructure deals.
Yeah.
Kenya choosing China over France. Zambia's power line with Tanzania.
Those show the ongoing importance of infrastructure development, which is vital for AfCFTA. Zambia-Tanzania Powerlink is a perfect example of cross-border infrastructure that enables trade.
So there are underlying positive movements, but they need the AfCFTA framework to really function well.
That's a good way to put it. The framework needs strengthening to leverage those developments.
Okay, finally, let's look at the FX corner in the report. Currency movements across Africa. How does this feed into the AfCFTA story?
Currencies are crucial for trade costs and competitiveness. Look at the Ghanaian cedi's slight depreciation due to inflation, debt.
Makes their exports cheaper, maybe, but imports pricier?
Exactly. That volatility is tough for business planning. Contrast that with the Kenyan shilling, which the report says was relatively stable.
Thanks to central bank action.
And better macro indicators, apparently. That stability helps trade, reduces uncertainty for businesses in that region.
But then you have the Nigerian naira. Significant depreciation mentioned.
Huge depreciation, dollar shortages, inflation, confidence issues. A very volatile naira makes cross-border trade incredibly complex and risky for Nigerian firms.
Yeah, I could see that. And the South African rand.
Sharp losses noted, power problems, election jitters, global risk version hitting it. Again, a weaker rand helps exporters maybe, but hurts importers.
And the West African CFA franc.
That actually appreciated, linked to the euro peg and maybe more regional stability there, so a different picture again.
So the currency situation across the continent is really varied, adding another layer of complexity for intra-African trade.
Absolutely. Different inflation rates, different monetary policies, different levels of stability all impact the real cost and risk of doing business across borders under AfCFTA.
Okay, so pulling this all together from the Stay Wired report, feels like AfCFTA isn't dead. The vision is still there.
Definitely not dead.
But maybe floundering is the right word the report uses, held back by all these very real interconnected challenges.
I think that's a fair assessment based on the report. It's not failure, but it's struggling against these deep-seated issues. Bureaucracy, infrastructure gaps, private sector readiness, political factors.
And these aren't necessarily deliberate attempts to block it, but more systemic problems.
Yes, more systemic inertia and the sheer difficulty of coordinating change on this scale rather than outright obstruction in most cases.
But the potential prize is still huge, right? That UNECA estimate, $70 billion yearly gain if intra-African trade just jumps by 40%.
Immense potential, that's the carrot. The reason to keep pushing despite the difficulties.
And there are some positive signs mentioned? Tools being developed?
Yeah, things like PAPSS, the Pan-African Payment and Settlement System, trying to make local currency payments easier. That helps.
And successful regional hubs, like Ivory Coast, learning from them.
Exactly, seeing where things are working. So the way forward seems to be, tackling those core issues head on.
Slashing the red tape, seriously funding logistics and infrastructure.
And finding ways to really boost the private sector's capacity to trade regionally.
Right. It's clearly a long road ahead. So as we wrap up this deep dive, drawing on that weekly Stay Wired report, the AfCFTA dream is alive, but the reality is complex. It makes you wonder, Considering all these challenges and the potential fixes, what single factor, if you had to pick one, do you think will be most critical in deciding if AFCFTA truly takes off? And maybe what unexpected side effects could come from pushing for this level of integration? Definitely something to think about.
Indeed. It's incredibly complex, isn't it? Success likely needs progress on, well, almost all those fronts simultaneously.
Thank you for joining us on this deep dive exploring African trade and the AFCFTA through the lens of the weekly Stay Wired report, 6.pdf.
We hope you'll keep thinking about these issues and maybe ponder that final question for yourself.
Stay Wired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the Stay Wired Weekly Recap.